Listen to this podcast now
on the Red Apple Podcast Network. The Leadership Thread with Dr. Peggy Polonus.
I'm Dr. Peggy Polonus. Join me on each episode where I unravel the story that shaped leaders, tracing the thread that led them where they are today. Because leadership isn't born in adulthood. And thank you once again for joining us on the Leadership Thread, education, ethics, and sustainability.
Download all of Red Apple Media's podcasts right now through your favorite podcast platform.
Listen, all you New Yorkers. Excuse me, taxi. Okay, we're looking around.
This is the 77 WABC minicast.
Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments. And her latest book is The Women's Guide to Successful Investing. And Jeff Kilburg, who's the CEO of KKM Financial and Notre Dame Football. Put it right in there. Anyway, we had a big week. Stocks up. Dow is up 1338. S&P 500 was up 214. The NASDAQ was up 931. So it's about, 3% increase for the Dow, 3.4% for the S&P. And some people are wondering maybe this past week was a bottom. The pullback for the S&P was 9.1%, if I have that right. And have we seen the worst of oil prices? The president has issued a very strong warning. Remember when I gave Iran 10 days to make a deal or open up the Hormuz Strait? 10 days to make a deal or open up the Hormuz Strait. Time is running out. 48 hours, that's Monday, folks, before all hell will rain down on them. Glory be to God, President Donald J. Trump. So how does that figure? Anyway, what do you think, kids? Nancy, you first. Do we dare think there's a bottom? And what do you make of this rain down all hell? The last Pentagon push, perhaps.
Yeah, I do think so. I mean, this is a pragmatic president who understands the peril of letting this drag out too long and also the peril of letting them off scot-free. So at the risk of sounding like a warmonger, you know, Larry, that my son's a Navy pilot. I'd like to see him home for Christmas. And he's about to deploy. So I think, you know, we are in the position of strength, and I think there's a bull case to be had under all of this. You got corporate profits up, margins are near historic highs. One Big Beautiful Act refunds are up 20% year over year in March, so that should mitigate some of the higher energy costs. And on an inflation-adjusted basis, you know, a gallon of oil hit $6.17, inflation-adjusted, in 2008. We're not close to that, and we spend a lot less on energy as consumers, and our fuel efficiency is better, requiring less. Tariffs are going to, you know, provide a tailwind to the economy to the tune of $70 billion. And then you've got a stable job market, productivity in all caps, which we've been talking about for years. You and I witnessed it in the 90s, and I'm sure Jeff did too, by the way. It's great to be on with you, Jeff. Big fan. And then a market multiple of 19 times. So 10 years behaving in the range. I think we're in a position, we bought calls on the market last week, and I think we rarely do that, but I think we're in a position to see stocks take off. AI stocks have been consolidating, and I think they have an opportunity to really reignite and soar. So I'm pretty optimistic. Best time to own stocks is, after periods of decline, and what follows every bear market, a bull market, and we saw the NASDAQ enter correction last week. So I think this is all good. Could go down a little more, but I think we're positioned well.
Yeah, the bull-bear ratio, way too bearish. I'll throw that one in too. I like what you said about scot-free. I talked to Steve Forbes at the beginning of the show. He made the same point, that the president knows that he must reopen the Strait of Hormuz in order to really declare victory. And he's not going to let Iran off on this. And I think that's a really important point. And I think basically that's what he's talking about with all hell will rain down. We're going to reopen the strait, and we're going to run the strait, and we're going to run the oil story, and we're going to run Iranian oil. And any money they get, we're going to run that. Any disbursements, they're going to run that too. I mean, I think that's coming. But Jeff Kilburg, do you see it the same way, or are you more concerned?
Well, Larry, Nancy's the smartest person in the room, so I do agree with her. And just to add on,
she's always the smartest person in the room. She's
100%, no matter the room.
She's always, whatever the room is. I mean, if she comes on set, all right, it's stage J. That's her we broadcast. She's the smartest woman in that room.
Absolutely. But I want to piggyback on what she talked about, and we're about to go into earnings season, so we're looking for the 6th consecutive earnings season of year-over-year growth over double digits. We're talking 13% of the forecast. But what's interesting, and if I could jump into the options market for a second, and why I agree with Nancy that I think last week was a bottom, this off-ramp that President Trump provided us, yes, we need to stay on the off-ramp, which I think we are. They've been given another couple of weeks. But what was interesting, last Monday when we saw really peril in the market, you saw a little bit of panic, the VIX was over 30. What happened that day when we saw the greed and fear index went to the lowest reading, extreme fear of 9, single digit? We saw options in the S&P 500. The volume surged. We saw over 13 million S&P 500 options trade, but the put to call skew. Nancy was smart buying calls, but the rest of the knuckleheads in the market were 62% buying puts. And when you see that type of put buying, that was a capitulation. Not a true conventional capitulation, Larry, where you see the market have a new low, but we put a new low in the S&P 500, almost under 6,300. We saw those options really get offside, and Tuesday we saw a little bit of optimism, and that off-ramp represented the markets, and all of a sudden, boom, we saw the S&P 500 go from 6,300 to 6,600 due to the fact that so many people were off sides in their positioning. So I think if we could get through this 48-hour deadline without all hell breaking loose, I think the market has the ability, believe it or not, to make new all-time highs in the next 4 to 6 weeks.
Which was it Tuesday or Wednesday that the market went up 1,100 points, the Dow?
Turnaround Tuesday.
So, that's got to mean something, because that was a big move. I mean, I think
it meant a lot, and I think the options market validated. That was my whole point, and not to get too wonky, but when you see a double volume surge in options and that put skew, meaning so many people are buying protection, that really kind of was the telltale to me. And then we saw it snap back. The VIX went back down to 23. So I think people are realizing, and this was also one other thing, Larry, the disconnect. We saw crude oil go up $12, $15 from the rhetoric from President Trump on Wednesday evening. And what happened? The markets recovered. They were down 2% overnight, and they went back to even, actually snapped a almost 10-week losing streak for the S&P 500. So we ended the day positive because the market is bottoming before the solution is truly presented. So I think that's important, and that typically happens in all conflicts going back decades and decades. The market turns around first.
You know, it's interesting, Nancy, on that point. The market turns around first. I think that's right. There's a lot of wisdom in the market. There's so many bears, and the bearishness, I think, has a lot to do with the Trump derangement syndrome, where the media coverage of the war is so bad. I mean, with some exceptions. I mean, Fox is an exception, Newsmax is an exception, but by and large, the media coverage is anti-war, we're failing, everything's bad. Wall Street, I think, is guilty of that. Once upon a time, Wall Street was a lot different than it is today. And the liberals on Wall Street, they're all making such bearish cases that it's so bearish, it's going to have to be bullish, because they're missing. The market is sending a different signal than the gurus, the portfolio managers, the geniuses who talk to the Wall Street Journal or the New York Times or CNBC. They're wrong. They're going to be very wrong, I think.
No, I agree completely. And in fact, there was a cover on The Economist where it said "Advantage Iran" with a hand around like a sort of a neck, I guess was what it was supposed to represent. And that's just baloney. I think when I go, I don't know if Jeff feels the same way, but when I go to conferences, there are an awful lot of very young people who have only lived in a world where, bond prices go up and yields go down, and we have, moral hazard intervention, lack of moral hazard intervention from the government. And so when we get an actual crisis, the algorithms read the headlines, the hedge funds jump in, and add to the volatility. And for me, that's an opportunity. I mean, it kind of makes me crazy at times, but it's an opportunity to buy great companies on sale. And that's what we did during DeepSeek. I mean, remember, we were in a NASDAQ bear market in the first quarter of last year. We were in buying hand over fist, picking off names like NVIDIA at $108 share, Palantir at 88, Tesla at 240. Even with the pullbacks, these names are up significantly. And I think that's where you have to have some experience in dealing with geopolitical shock or, headline news. And you're right. It's all negative all the time. And, that will drive the markets in the near term. But again, not for the long term. And that's the opportunity.
And I think, Jeff Kilburg, you're right. The earnings, profits are the mother's milk of stocks. You sort of keep your eye on the earnings. In a way, you shouldn't worry about the politics or the military or the war. I know you have to look at that, but in a sense, the earnings are more important. That's the message you have to watch. The earnings are coming in great. You're right, double digits. The outlook, forward earnings, very, very good. 335, something like that. That's a 19 times earning multiple. That's the key point. People miss that. Profits are everything in this game.
And I'd add on that people don't realize, but this Iranian conflict that we're finally fixing after 47 years of them screaming death to America, we are going to see a deflationary period, Larry. We're going to see energy come down. People are rerouting supply chains, and you're going to see energy not be at $50, $60 in crude oil. It's going to be at $40 or $50, and that is the solution that I get so excited about, and that's why we're going to see this bull market go again for another fourth year. And that's why I get excited about, Nancy brought up the opportunity. Look at the dispersion. We've never seen dispersion between the number one S&P 500 sector being energy and the worst being financials. That's a 50% performance dispersion. So we're picking up names like, Duke Energy, Marathon Petroleum. We've been looking at the Johnson & Johnson, the Essential 40 ETF that I run. Those are big blue chip names, and this broadening out of the stock market, we're just tackling it. We're so excited because we see the back half here, once we get through this solution, is going to be so surprising to the bears. And I can't wait to kick those bears in the teeth and we make new all-time highs here in the next Q2.
It's fabulous. People in the oil industry, if you talk to the trade group and some others, they'll say that production costs, marginal costs to produce the extra barrel of oil is somewhere in the low to mid 60s. Okay. We're over 100 now. But I had dinner, I'm not going to say with whom, but I had dinner with a very senior executive of an enormous oil company, okay, I'll leave it at that, who told me that they can make money at $35, okay, $35, all right?
Yeah.
So your point about 40 to 50 may seem a long stone's throw from where we are now, but you know what? It's in the mix. You're exactly right. It's in the mix. Nancy, I'm a big follower of Ed Yardeni, not for political stuff, but, he's just gives you great stock market stuff. And he's saying on these 200-day moving averages, the worst hit, and therefore the cheapest, might be consumer discretionary, financials, and infotech. Just wondered what you thought about that.
No, I love them too. We've been adding to consumer discretionary names, trying to span both the high income consumer and the lower income. So we have been buying things like Ulta, and TJ Maxx. We also own a number of other names in the group, not the least of which is Amazon. And you could also argue that, and Walmart, even though that's a staple, you could also argue that Apple is a consumer discretionary, but, and we've held that as in our Infotech holdings as kind of the T-bill of technology names, very defensive. And then we're overweight and have been adding to technology. So a little different than Jeff and our ETF, TGLR, we were trimming about 20% of our energy holdings and buying up some of the beaten down tech names like Microsoft, adding to some of the infrastructure names and trimming back names that have been done really well for us, like Lam Research. So it's, investing is about being mostly right. So that's my goal. That's how you compound into the top deciles or percentiles.
Jeff Kilburg, I got a little less than a minute. Bank stocks, I mean, they're profitable and capital requirements are coming down with deregulation from the Fed. What do you think of banks' financials?
I specifically like J.P. Morgan. We're ending that position, but I'm going to go back to your dear friend and my former football coach, Lou Holtz. Unfortunately, he's since passed. But he had an acronym, Larry. He had an acronym of WIN, and it stood for What's Important Now. And for all the investors listening right now, what's important now is, to Nancy's point, rebalance, reposition, understand owning great companies at great discounts is where you're going to be positioned to make money in 2026. So to Coach Holtz and all the people, the lives that he affected, mine being one of them, I'm grateful for everything he gave to me. But I think that acronym, WIN, you have to take that with you. What's important now?
So, first of all, he affected my life. I loved him. I served on 2 boards with him. I mean, he was just an extraordinary person. And, a man of great faith, which I just love, and always helps everyone around you when you have a person of great faith. Worth thinking about here on Easter, right? A wonderful holiday, happy and holy. Kids, you're great. Nancy Tengler, the smartest woman in the room, no matter what the room is. And Jeff Kilburg, thank you for bringing up Coach Holtz. Terrific stuff. You're both wonderful. And the market's going to be very, very good as America marches on.
The Larry Kudlow Show on the Red Apple Podcast Network. Let Century Management Solutions get you to your next medical appointment. They specialize in non-emergency medical transportation, connecting patients to care, safety, reliability, and on time. Their advanced technology platform seamlessly coordinates patients, healthcare providers, insurers, and transportation partners all in one powerful network. With over 200 trusted transportation providers, they deliver scalable solutions backed by real-time tracking and complete transparency. Go to SENTRYMS.com.